Welcome to this week's African Agri Overview. This week we will be looking at the latest poultry prices in Zambia, while Jacques will focus on soybean prices in Lusaka, with the Zambian government announcing that they will sell their 100,000 ton strategic reserve position, which will definitely impact price movements. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview, made possible by Zimmatic irrigation systems. Zimmatic pivots and lateral move systems combine high-quality components with exclusive structural designs and innovative features for a long-lasting solution you can count on. The goal of these videos is to provide you with valuable information that can help navigate the dynamic world of agriculture on the African continent. Make sure to contact our regular market analyst Jacques for more detailed reports on African soft commodity markets, and make sure to like this video to keep this information coming. A look at the latest economic indicators. Brent oil prices decreased to $85 per barrel due to lower global demand. The conflict in Gaza is, however, keeping oil prices on a relatively higher level at the moment, and if this war escalates to beyond the Gaza borders, oil prices could start to increase again, something to keep an eye on. The kwacha weakened over the last month due to the US dollar that gained a lot of momentum. Increased global uncertainty means that investors will look at more stable investments such as the US dollar. As a result, the latest exchange rate is currently trading weaker on 22.1 kwachas per US dollar. Looking at poultry prices, we saw these prices stagnating due to lower demand, while the weaker exchange rate still gave some support to these prices over the last month. The day-old broiler price stayed on 15.83, while day-old layers still traded on 17.67 kwachas per head. Live layer cull prices decreased to 59.67 kwachas, while live broilers decreased to 88.33 kwachas per head. The average egg price also decreased slightly on the back of low demand, now trading on 52.33 kwachas per tray. The latest grain prices in Lusaka traded as follows: maize on $309, wheat on $540, soybeans on $407, while soy meal prices traded on $430 per metric ton.
Thanks, Johnny. This week we revisit the Zambia soy complex. Not much has changed in our S&D forecast of late. However, last week the Zambia government announced they will sell their 100,000 ton strategic reserve position held by the FRA through ZAMES, the Zambian Commodities Exchange. This is a substantial parcel of soybeans that will become available, which the market probably did not expect so soon. Let's do some analysis of how this announcement could impact price direction in the soy complex. Our balance sheet forecast for 2023-24, the current marketing year, remains more or less unchanged. We expect record production of around 600 to 650,000 tons, local crush of 520,000 tons, exports of 100,000 tons, and ending stocks around 100,000 tons. A relatively healthy balance sheet. The export number might sound excessive, as very little has been exported up to this point due to the government's export quota system. Only 15,000 tons of export permits have been issued during the last few months. We believe the government could open the borders for soybean exports once their stock reaches the market. Slowing exports will pressure prices, not what the government wants to see while trying to sell their stock. The market guess traders, speculators and farmers could be sitting on a further 30 to 50,000 tons of soybeans while crushers are well stocked. Also, we understand soya meal stocks are building at crushers due to a lack of exports. Zambian soya meal prices were too high in the last few months to stimulate significant exports. We do not expect a shortage of soybeans in Zambia before the next crop should harvest from April 2024. The next graph shows price history of Lusaka soya meal, soya bean and crude soy oil import parity from Argentina. As indicated previously, Zambia is a net importer of edible oil and therefore import parity is the benchmark. Both the soybean and soya meal price increased significantly, around 40%, from late June to mid-August, as indicated by the blue circle. The reason for this price support remains difficult to explain and not fundamentally backed. It made Zambia soybeans and soya meal uncompetitive in the export market. Since mid-August, prices for both soybeans and soya meal gave back nearly half those gains. Soybeans are currently trading at $407 a ton and soya meal at $430 a ton in Lusaka. Soya meal prices have moved closer to export parity to South Africa and Tanzania of late. This graph shows export parity Lusaka destination South Africa at around $415 a ton compared to the Lusaka soy meal price at $430 a ton. Could see exports soon. We understand that price around $400 a ton should stimulate spot exports to Tanzania. A factor that could impact the Zambian soy meal price is potential low demand from South Africa, as they are dealing with the worst avian flu outbreak in many years, which has seen poultry flocks decimated. South Africa is normally the main soy meal export target in large soybean crop years. Top Zambian crushers are still hoping the Zimbabwe market, which commenced issuing soya meal import permits last week, will support soya meal prices. So the question is, can exports to Zimbabwe support the Zambia prices at current levels? We are skeptical. Given the above analysis, the question is how the release of the government soybean position on the local market could impact prices. The market felt Zambian prices were destined to move to export parity soya meal to larger markets such as South Africa and Tanzania before the government release was announced. Given the large crop produced this season, we guessed the government could allow unrestricted soybean exports soon. We understand several neighboring countries have shown interest in the government's soon-to-be sold position. If prices make sense and if unrestricted exports are allowed. The government has started to offer some soybeans on ZAMES, however, only indicating volume and not an offer price. It seems they are in a price discovery exercise. General market view both soybean and soya meal export parity ex Lusaka to move significant volumes in the region of $400 a ton. See the black line. Likely where prices could be heading in the short term. Heard some concerns the government's soybeans will probably only physically reach markets by December, January. This could be negative for new crop soybean prices to August and April, as crushers could be sitting on more old crop stock than normal when the new crop commence harvesting.
Thank you, Jacques, for sharing such valuable insights. These videos are made possible by Zimmatic irrigation systems. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jacques. I'm Dr. Johnny van der Merwe, and thank you for watching.